Good morning, everybody. Welcome back to Morning Markets on Tuesday, the 2nd of June. A couple of things that the investment team at True Potential have been discussing this morning. The first was our usual review of asset markets, what's happened in the past 24 hours. I think the thing that we observed there primarily is just the continued improvement in equity markets yesterday, with the Euro stocks up about 80 basis points, the FTSE up over 1.5%. That can also fed into the US, where we saw continued performance there, with most major indices up between 50 and 100 basis points over the course of the day. And indeed, the Russell 2000 smaller cap index continuing to perform well, building on that change that we noted towards the end of the month of May. If we then turn to what's happened in markets in Asia, we continue to see equity markets moving higher there, led by Japan again, and that continues to build on the strength that Japan saw during the month of May. So that's something to continue to look at and observe. One of those markets that tends to go below the radar screen and quietly perform at certain points in time. Just looking at currency markets, I think the main thing there is the continued depreciation of the dollar relative to a basket of other currencies, and primarily that's coming through as euro strength, as the euros continue to strengthen on the back of the reform programs that have been discussed in the past couple of weeks, and the expectation of what we will see from the ECB later in the week. Interestingly as well, despite the rhetoric in the background around Brexit, the sterling looks to be approaching 125 to the dollar, a level that it hasn't seen for a number of months. So that's, again, just an interesting observation. I think more of that is coming from dollar weakness as opposed to sterling strength, but you do see the two things working hand in hand. Turning to bond markets, not a lot of change there, and I suppose that's the interesting point, and something that continuing to think about as a team. There's very little movement, particularly around the 10-year note in either the UK, the US, or in other major markets. And that's just an interesting observation at this point in time. Continue to see performance from the corporate credit market, and in particular high yield, where that was stronger overnight. And that's what you would expect given the risk attitude and how risk has evolved within the marketplace. From the economic perspective, we saw a number of PMIs building on the information that we had from China. Not a lot to take from these, I don't think. All that we can effectively say is that they've showed improvement month on month. What that may mean is that April marks the bottom of some of these forward-looking surveys, and now we're into that improvement phase, and we'll see that coming through. The other point I just wanted to touch on finally today was fiscal support. We've seen more details emerge from what is happening in China, where the PBOC have got a very small fiscal support program of some 50 billion, and that is in comparison to what we've seen out of other areas. But this is particularly targeted at small and medium-sized enterprises through the small banks in China, where they will be buying loan books from those banks. That's important given the role that the SME, small and medium-sized enterprises, play in the Chinese economy. So that's something that's a positive there from a market support perspective. And then also we have seen increasing discussion that there will be a further fiscal package coming from Germany. Germany, if you remember back to towards the end of March, enacted a package of some 750 billion euros. The package that's being discussed at the moment is incremental to that, between 50 and 100 billion euros. So if we take it at the midpoint, 75, an additional 10% to that programme that's already in place. And it just goes to show the actions that are required to help economies through this very difficult phase of dealing with COVID-19. That's it from today. Please join me again tomorrow. Thank you.